What is up, guys? Welcome back to another episode of Lucid Daily, and today we have a very interesting topic that we're going to talk about. First, we're going to go ahead and talk about the stock price action across the EV sector and exactly what happened, and then we'll dive into the meat of this article about 3 reasons why it was presented that you should not invest into Lucid, but I will also provide counterpoints, and I will say my opinion whether I believe that these points are true or false. So let's go ahead and dive into everything. If you haven't yet, consider subscribing, but let's go ahead and get started. All right, first off, Lucid was up 0.6% today, a little over 0.5%. So it's better than a red day. It was relatively flat, all things considering, and it underperformed the rest of the EV sector. There wasn't really any news regarding Lucid today. They did release like a 60-second commercial for World EV Day, so not too much. And the first thing I think is just like production costs, commercial costs, things like that. Like they have the reservations. Like I understand we have 30,000 reservations. I know that's not like nearly as many as Rivian has, but it's just never mind. Well, that's just a topic for a different day. Next, we have Tesla up 3.6% today. There was 2 pieces of news that came out today. They had an executive leak some information. And then they have a couple of rumors of different kind of battery plants, different kind of lithium plants. So I actually didn't do a ton of research, so I don't know which plants they were. So those were the 2 reasons that I believe Tesla was up as much as it was today. Just for some clarity on that. Rivian up 1.8% today. Not sure why Rivian was up a lot more than Lucid. Didn't see any news about Rivian. So nonetheless, Lucid did underperform just a little bit today. But happy enough, Lucid is finally above that $15 mark. We were hovering under that $14 mark for a little while there. So we are at a $25.3 billion market cap. And Rivian is currently at a $34.4 billion market cap. That Mercedes deal really helped them out quite a bit. All right, so there was this Motley Fool article that caught my eye. They got me really good with the clickbait. And in this video, I'm going to go ahead and talk about the things that Motley Fool talk about. We'll talk about what I agree with them on, what I disagree with them on, and we'll dive into everything in between. If you're new here to Lucid Daily, I try to be the truest, the most real source of information because I look at many companies every single day, their financial reports, the research, the news, and everything good and bad and ugly with these companies. And I absolutely have grown. I love the Lucid community, and I also think that the company is fascinating, and I tend to understand it slightly better than a lot of other companies that I look at. So let's go ahead and dive into what's going on with Lucid and why people may be making an article with such audacious statements. Cool. So 8 billion reasons to avoid this EV. So my title is 3 reasons, but I know this is 8 billion reasons. And obviously you're going to know what's coming, but they have a couple of other points that they make. So they say it kind of just starts off by they've recently filed paperwork to sell up to $8 billion worth of shares. They have not securities, and the important thing is they have not done it yet. This is what's called a shelf offering, so they have 3 years to do it, and I'll explain my opinion on that. So Lucid's need for cash isn't ideal. However, it's understandable. We knew that this like ramping production is extremely difficult and things like that. But they brought up a good point that I want to talk about. So let me go ahead and get the highlighter out here. So they say, right, where was it? They brought up a good point. Let's see. So something while I look for this, let's talk about this. So they talk about EPS, and EPS is really important. This is probably so the reason the company goes to the stock market is obviously to raise money, to reinvest back into the company, to build a product that consumers love, and hopefully that excess cash will come back to the investors one day. It's just a hope, but that's EPS. The number of shares is actually really important, and EPS reflects exactly how much earnings they have per share. So that's obviously self-explanatory. However, they talk about like the power of dilution and how dangerous it can be. So they explain dilution a little bit right here, and you can pause the video and read it if you want. But basically, they say, for example, a company doubles its share count, and the earnings per share remains the same. There's no benefit to shareholders, meaning it's not good for shareholders if the number of pieces of the pie increases, but the value, like, actually don't know what to go with that pie analogy, but I didn't think about that beforehand. But it spells it out pretty clearly here. If you increase the shares, like having the same EPS doesn't change anything. So they're gonna have to. What it basically means is they're gonna have to invest that money wisely and have that money come back. And I know that's a super broad statement and it's not super clear, but the importance of raising capital as an investor. When companies raise capital, the main thing you're paying attention to is where is that money going? Is it going to salaries? Is it going to overhead costs that we don't need? Or is it going into manufacturing, production, logistics, things that are actually causing the company issues? So just keep that in mind. That's definitely my number one question for this earnings call is what do they plan to do with the money? I want to hear specifics. What do they plan to do? Question mark, question mark, question mark. Like, I want to hear a specific game plan. So they say, nobody knows the exact structures and size of the raise yet, but it's almost certainly going to dilute shareholders by a solid amount. So that's just something we're going to have to pay attention to. There was one thing that I want to talk about. They talked about the earnings call, and I thought it was interesting. I guess it's not here. Interesting. Okay. Well, if you see it, then you get a little Easter egg, but there is a good piece of the earnings call in here. Okay. So, it's right here. That's why. So they then talk about mixed signals for management. And actually this week, I think that a lot of this has been solved. So let me just kind of summarize this. I think that this is a real danger. And what it's going to do is anytime Lucid runs up in share price, they're going to issue new shares, thus diluting existing shareholders to raise money. Welcome to investing. So the thing is, for the next 3 years, my prediction is it's going to be very difficult to see a huge rally in Lucid before the executives decide to raise money. Because every time they raise money, it is easier to every time the share price of Lucid goes up, it's easier to raise more money. Okay. Bad enough that a hefty rise is coming. It seems like there's miscommunication with management, and that kind of came out this week that Peter Rawlinson sounds like cleaned house. Absolutely, just there was a lot of bad apples, it sounds like, or just people were not communicating exactly what needed to be done in terms of production, and it just didn't happen. And they give it a good example, and I actually think this is a pretty good example. So management noted in its presentation that it believed its liquidity was sufficient well into 2023. So why not mention it during earnings? Like they say, like they would have had, like we had up to 3 years to raise money, but why didn't they mention this huge money raised until last earnings? One might suspect here, I'll just highlight this in yellow. One might suspect management knew the raise was coming, but decided not to mention it. There's no way, and basically they had no way to know the stock was going to fall 73%. They did actually raise money, if you guys remember, when the stock was near all-time highs, which was interesting, which is the point of it. It was a good plan. But it was the beginning of Lucid's 73% fall. So expect some similar types of reactions when people, it's just the nature of investing in the stock market. So hopefully this mixed signals from management has been erased or is improving. So that is my opinion. And this is just kind of, it's interesting. I actually tweeted about it. If you don't yet, follow me on Twitter at McKay Thomason, capital M, capital T. So it says, lastly, it's alarming that Lucid would line up a significant raise in shares after it went public in July last year. The process of going public is supposed to raise the money a young company needs for growth and to take it to the next level. But Lucid struggled to ramp up production while dishing out a lot of stock-based compensation in the process. And that's something that if you go on Twitter, you're going to see a lot of people just completely saying like, oh, like it's crazy. But Motley Fool put together this graph that's absolutely fascinating. So here, I'm going to highlight it. It's pretty clear, but in purple, I'm going to do the same thing. In purple, Lucid stock-based compensation from over the last year, $656 million, because they had an incredible increase in share price, and it unlocked a lot of tranches for the founders and the executives that they are able to cash out. And if you look at total revenue provided by Lucid, it is a lot less than that, 181 million. So they even agree. Lucid makes a great product, and it even won Car of the Year, but there's just a couple of things that raise a couple of red flags. And do I think that these are real red flags that investors should pay attention to? Absolutely. Do I think that it completely shuts out the idea of investing into Lucid as a whole? I don't think so. I think we're going to have to be patient with the dilution. I think it really depends what they're going to do with this money. If they're careless with it, then it's obviously going to be something that we're going to have to talk about. And that's just why you guys should consider subscribing. Is just, we'll talk about everything, the good, the bad, and the ugly. I'll give you guys my honest opinion. Mixed signals, I'm really hoping that we can get better. It's going to it's going to come out in production numbers. That's where we're going to see if this gets solved, is if we have better management now. And as for excessive stock-based compensation, the founders saved themselves before they saved the company or investors, which is a little frustrating. I guess I should say the executives. So I think that's a little frustrating, but it's the nature of the beast. They could not have predicted the stock was going to run like that. So you can only be so mad because it's just how the market works. 2021 was an insane year for investing. They could not have predicted that. So hats off to them. They got the company to that share price. It's all fair. That's what I love. It's like, it's numbers. I always say, let the numbers talk. And hey, if the system worked out in your favor, take it to the bank. It would be cool to see the executives buy their own shares. I think that'd be pretty sweet. But so it is. And again, guys, the product is phenomenal. I have personally driven in the Lucid, and I have heard incredible reviews about the actual product from other people. Let's just see if we can begin to solve the issues of production, and what this dilution will look like, and how much it'll be, and what they plan on doing with the money, and their plan for raising the money. Because like I said, like it shows here, nobody knows the exact structure and size of the raise yet, but it's almost certainly going to dilute shareholders by a solid amount. We'll pay attention to it. We'll cover it all here. Consider subscribing. And also tonight at midnight, the price is going up on my private group, where if you want access to basically ask me questions 24/7, get my opinion about things, not just Lucid. But although we can talk about Lucid in there, check out the link in the description. The price is going up tonight. So if you haven't yet, go ahead and join the Discord. We have a lot of fun in there. I also do my personal buy sell alerts in there. So if you want to know when I'm buying a company or selling a company, I put it all in there. I am always loyal to Discord members before I am to the comments. So consider checking that out there. I hope you guys have a fantastic rest of your evening. And like always, see you next time. Thanks for watching.